Hello and welcome to this edition of the Daily Index Review brought to you by Bootleg Macro. First time for everything. We're going to do this live with you where we review the SPY, the Dow Jones, and the NASDAQ. Now, what we have right in front of us, boys and girls, is actually a look at the overall index itself. This is not an ETF. This is actually how it trades. So it closed at 45.13 and 39 cents today. We did have a down day, it looks like, on the index where it was down 1.38%. Over the past 5 days, it is down 1.17%. And you can look at this 9-month chart below. Today was a different kind of day. Now, a lot of times you're going to want to ignore this kind of action because, if we look back here, we saw a very similar move. We saw a drop, we saw a pop and drop, and we've been off to the races ever since. We see these kinds of moves all the time where you get a gap lower and it kind of falls. The one thing that I really kind of am interested in seeing about this individual move, especially when I think about the composition of the SPY index, is that this is cap heavy. It's cap weighted. So this is going to be dominated by the largest companies that exist in the US. This is not necessarily going to be representative of what the overall economy looks like. So right now, knowing that this is really going to be tech heavy, we're going to expect that if the SPY was down today, the Qs were also down incredibly bad. When I say Qs, I mean NASDAQ. I usually look at the ETFs, but you get what I mean. We still have a go long in the short term, intermediate term, and longer term. We're still bullish on the short term, intermediate term, and longer term. The thing that's interesting, though, is where we are on sentiment. And if you look at this ultra fast graph here, this sentiment indicator really represents bullishness and bearishness. You can see here we've got the 2-day average, 5-day average, 10-day average. This is over essentially I think it's either the 23-day average of that or the 10-day average of that. Essentially what we're seeing, though, is we've been on a rising bull. I know that doesn't mean anything to you, but it means something to me, of positivity and rising demand, where now it looks like we have, at least for the time being, probably flatlined. We may not go higher, we may not go lower, but it doesn't look like we're necessarily going to rise at all. And the reason why I say that is because this indicator generally oscillates between 50%. It wants to be bullish and bearish, but right now you've seen nothing but a bullish move for quite a while. We're going to go ahead and look at the chart. Obviously, the SPY index over the past year has been absolutely insane. The move that we've seen since essentially January 1st of 2021 has been nothing short of what feels like a miracle for the bulls, and really nothing except like a tragedy for the bears. When you look at the overall daily chart, yes, this is a big move. It was a big candle. We did open at 45.50. We did close at 45.13, so we are down a little bit after that gap. We can see that the bullishness is really receding, bearishness is returning on the daily sentiment. We can see that volume's not great when it comes to Google Finance and it comes to the overall indexes, so I'm going to ignore that for now. When it looks at the volatility, though, volatility is very useful for us to look at. The volatility on the index has been rising. It looks like our correlation is starting to go slightly positive. So when you get a rising volatility and a rising positive price correlation, that means the price should rise. So it's interesting to see the type of move that we saw today. When we look overall at the trade range, one of the things that I will say is that we did get very near the top of the range, which is creepy when it gets to 46666.72, but that's where it was. It looks like the bottom is at 43.55.97. That would be a very painful drop for a lot of folks, but it wouldn't do anything to change the overall long-term trend. We look here at the ultra-fast sentiment. This is very similar to what we looked at earlier, just a larger version of it. Before we switch over to the QQQs, I do want to remind you can always subscribe to the New High newsletter, where we do give you 25 stocks breaking out every single Sunday. What we're going to do first is we are going to update this. We are going to go ahead and look back at the beginning of the daily data, looking here specifically at the NASDAQ. It'll take just a second for it to load, and now you can see Google Finance does the magic. You notice again, though, it does not come with any volume, and that is exactly why we're going to ignore it as we look at the Qs. Again, the NASDAQ. We do see that the NASDAQ closed at 13,973.45 cents, an interesting move. We do have what looks like a price falling on my price future path here since the 28th of July. We are down 2.17% over 1 day and down 1.09% over 5 days. This is not necessarily the type of look you want to see right now, especially considering that I think, in my personal opinion, tech has been such a heavy winner at the very beginning of the year that we're going to get a little bit of rotation, especially if you start to look at some of those oil prices, which I'll add on looking at oil prices at the very end of this video. Before we rush along, though, we do want to cover is that right now NASDAQ does not have a go long or go short signal on its short term, intermediate term, or longer term. The most recent signal was a go short on the short term. That shouldn't really mean anything, but it's just something to highlight. We can see that on the trend indicator, we're still going to be bullish on the short term, intermediate term, and longer term as of tomorrow. When it looks at the rolling sentiment, the one difference here between what we saw when we looked at the SPY or the S&P 500 just earlier was that you are getting a proper falling bear here. This is a very similar look to how the SPY has been trading. The one difference is that this has essentially been falling since the middle of June. We have been getting higher prices, of course, but the moves just aren't what they used to be, I guess, which if you look, this pretty much mimics exactly like what Tesla looks like. Now, what we're going to do here is we're going to go kind of reversing up from the bottom. We're going to see that the ultra-fast sentiment is still rising. We can see that the top of the range here for the NASDAQ was at 14,633, and now the bottom is at 13,456. It would be a little painful to go all the way down to 13,400, but if we do it, we do it, and we won't complain because you got to make money one way or the other. We look at the volatility price correlation. It is rising. I wonder what the volatility is doing. The volatility is also rising, so the price should be rising, which is actually even more concerning when you think about the price move today. And why I say that is because you should think about how a derivative works in terms of math. It should be the difference between speed and acceleration. What we're looking at right now is that the price fell while the derivative of volatility and the correlation of price were completely not wanting it to go that way. That is a change of character, which means that price is really driving everything. Now we are going to look, obviously, at the weekly. It looks fantastic. We're going to switch over to the Dow Jones just for sake of time. DJI. And we're going to go ahead and look at the raw data that we will get in just a second here. It looks like the same thing. The one thing that I will call out that is really different, if you've watched the earlier part, we looked at the SPY versus the NASDAQ, is that the Dow wasn't even down 1 full percent today, and it's barely down over 5 days. And while we're looking at the type of move, I still notice that the Dow price is still, it is below its 5-day moving average, but its 5-day moving average is still above its 20-day moving average, which may not mean a lot. But in the world that we're experiencing right now, where tech and SPY essentially gapped lower significantly in 1 full day and the Dow did not, that gives us a good signal of what may be the place to look for some strength when we do get a turnaround. We can see in the signals here where short-term go long, intermediate term go long, longer term go long. We are bullish on the short-term, intermediate term, and longer term as well. And it looks like we still have a very positive look from the ultra-fast indicator. Now, this is very nice to see, I will admit. It's at 66% and rising even on the 10-day. It's very impressive. We don't have a falling bear. We don't see any yellow where we're getting around 50%. We're still in the mid 60s. Yes, we've come down and we will tomorrow, but that's really kind of a positive look when we're thinking about what we're going to get from the Dow Jones Industrial. Now, I know I haven't looked at this in any of the parts of the video, but this is where I give trading signals for myself. Essentially what it is, it's a concatenation of a bunch of different indicators or different things that happen on the data set that I believe are indicative of when you're going to see a nice move. This, you can see we got a buy back on the 17th. We got some big bulls here, which are very positive. We got some small bulls still rolling into right now. If we look just in general at where we think about this buy was, it was back on at 34,951. We're at 30. We got all the way up to 35.6. I mean, wasn't a bad place to buy. It was pretty much higher every single day after that for, I don't know, another week or so. But we can see that if we look at the charts, the Dow does appear to be the strongest. It had the smallest drop over the past year or so. It does look to be incredibly strong from a sentiment indicator. You can see the green bars are just increasing the amount of size. The volume did come through a little bit. It doesn't look anything crazy here, especially considering that today was a down day. The volatility is breaking out, and the correlation is also breaking out. So it's doing exactly what you'd expect. The only difference that I see here between this and the SPY and the NASDAQ is that the Dow has the top of its range starting to break out, where the other two did not. And I can see now at the daily fast sentiment, yeah, this is looking fantastic from just an up close and personal perspective of what you want to see in the Dow. The Dow, even of itself, if you think about it on the longer term, is just hitting the top of its range. It has the opportunity to start reversing, where you're going to see the blue lines next week probably get below the 15-week moving average of volatility correlation. And you really can say that there are some positive things happening in the Dow. Right now, this may be the end of summer, may be where we go from buying the Teslas and paying attention to all of the Palantirs and the AMDs, and we start paying attention to those oil companies or those industrials companies or those Caterpillars. There's just so many different things that are really happening in the market right now that I'm just very interested to see what this culminates in. And here's how I'm going to end this video. What I want to look at is I want to look at oil. And the reason why is because I think that oil right now is giving us a different kind of signal than what it's had in the recent past. I think for the past few months or so, oil had essentially gone sideways. You can see in the chart here, oil's essentially gone sideways. And we've gotten a move that's been pretty big since the middle of June, which I don't think is a coincidence. I don't think it's just a coincidence that it coincides with when tech was essentially going sideways, and we saw that big breakout and that vertical move in the Dow in terms of the bullish sentiment and the price. Today, though, what we saw, which is very interesting, we saw it be down 2.0%, and we saw it's now down over the past 2 days in a row. And the reason why I think that's interesting is because it matches what happened in the NASDAQ. And the NASDAQ is strong, but not as strong as it was. Like the price right now for USO is below its 5-day moving average, but the 5-day moving average has moved so much because it's been so vertical since June that it's still above its 20-day moving average. We still have to go along in the short term, intermediate term, and longer term. We are bullish on the short term, intermediate term, and longer term still. When I look just at what we see in terms of the way the data is shaking out, we do see a rising bull here in the rolling sentiment. We are very overbought in the very recent times, but that doesn't mean anything. You're getting this spike. You can see it essentially was going sideways for quite a while. Then the spike has broken out. We are at 63%, which is not, it actually may be the highest. It might be the highest value that we've been at in the past 9 months, which that is also always something to note. We can see that the top of the range is starting to break out. We came from a very low volatility range, it looks like, where we had very low volatility, and now the volatility is broken out. We can see that the volume has been falling as the price has been rising, which is what you love to see. If you want to believe in a bull market generally will have low volume, and it will have small moves, but it just grinds higher, like 1% a day, 0.5% a day, 2% in a week, and it's just grinding for weeks and weeks and weeks. We look here at what we see on the weekly chart. It does look like we may be seeing a resumption of a little bit of bullishness in the overall USO on the weekly. We can see here in the bullishness weekly sentiment indicator, it is below 50%. So it has quite a ways that it could go, and it came from just 40%, which this indicator generally will top out or bottom out around in the high 30s, low 40s. It's a good thing to see. I mean, what we're looking at too is the volatility is completely rolling over. Volatility correlation is falling while volatility is falling on the weekly. That's very positive. The top of the range, we are reaching for it for the first time in a long time. If we actually hit 73.89, I'd be so impressed. Or if we get even a little bit higher than that, because we haven't hit the top of the range since the last time it was properly bullish was in the back May of 2023. So we do look like we're starting to get a little bit of a change. The one thing I'm actually going to do here, this is going to be the craziest thing I'm going to do because I've never done this on any other video. I'm actually just going to go look at an individual chart that I don't look at very much, which is this one. This is a weekly sentiment chart, which is exactly what we looked at. It's just the only difference is that you get some of these lines, which are essentially indicators, and show you on the screen what you're looking at. We can see we're getting a massive breakout. It looks like even on the daily, we're seeing a massive breakout. We are bullish sentiment. We've got some go longs. We are seeing, it looks like the market has changed is essentially what we are dealing with now. I don't blame anything that I'm experiencing with oil on oil. I will just be very patient. I will be very cautious. I will watch. I will wait. And if I need to, I'll definitely buy more oil. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a great breakdown of all three indexes? And before you go, if you've made it this far, go ahead and get yourself a subscription to the New High newsletter. We send you 25 stocks breaking out every single Sunday just for free in your inbox. Go to bootlegmacro.beehive.com/subscribe. Talk to you soon.